AEHR just beat earnings, crushed its guidance, and hit record bookings. The stock's flying. But after our AI model ran the full analysis, it's giving a sell rating. Why? Welcome to Model and Market. I'm Emma. Let's find out. Rupert, walk us through the numbers. Why is AEHR suddenly one of the hottest names on Wall Street?
It starts with earnings. They didn't just beat estimates. They flipped a 1-cent loss into an 11-cent profit. Revenue also came in ahead of expectations, but the real surprise was guidance. Management expects fiscal 2027 revenue of $130 to $150 million. That's roughly 160 to 200% growth. On top of that, the company announced record quarterly bookings of $60.7 million and a record backlog of $80.6 million. You can see why investors rushed into the stock.
So the fundamentals are firing on all cylinders. Daniel, what is the chart telling us?
Technically, the recovery has been impressive. The stock is trading above its 50-day moving average, RSI is around 57, and MACD is close to a bullish crossover, but the model spotted two warning signs. First, volatility. The average daily swing is more than $12, making this a very volatile stock. Second, volume. After the earnings spike, trading volume has faded noticeably. The price is holding up, but buying conviction isn't.
That fading conviction is interesting. Rupert, what's actually driving the business transformation?
It's a successful pivot. AEHR used to depend heavily on EV silicon carbide testing. Today, around 95% of its revenue comes from non-EV markets. Its biggest opportunity is now AI infrastructure. As AI chips become faster, hotter, and more expensive, manufacturers need advanced burn-in testing before deployment. That's exactly where AEHR fits in.
Another section that caught the model's attention was insider activity. An independent director recently sold $1.6 million worth of shares, reducing their holding by around 16%. More importantly, the report found no insider purchases during the past year. It's not a panic signal by itself, but after such a strong rally, it tells the model that insiders are comfortable taking profits at current prices.
So the business is improving, insiders are taking profits, and buying momentum is fading. What's the final call?
Valuation became the deciding factor. AEHR is trading at around 64 times trailing sales. That's an extremely demanding multiple. The market is pricing in near-perfect execution for years to come. If AI spending slows or backlog conversion disappoints, that valuation could compress very quickly.
So the model isn't saying AEHR is a bad company. It's saying the share price has moved ahead of the fundamentals. Rupert, what would change the model's view?
The model would become more constructive if it sees sustained operating cash flow improvement, clear conversion of backlog into revenue, and renewed institutional buying. For a new entry, the model is watching a pullback toward the $70 to $75 range before reassessing the opportunity.
So that's today's AI recommendation. Sell. The AI story is real, but at 64 times sales, with fading volume and insider profit-taking, the model believes the risk-reward isn't attractive today. Do you agree with the model, or do you think AEHR is still worth buying at these levels? Let us know in the comments. And if there's another hot ticker you'd like our AI model to analyze, tell us below. Thanks for watching Model and Market. We'll see you in the next episode.